Welcome to Talk Tickers, where we're breaking down the latest earnings call from Urban Outfitters. And let me tell you, this was a big one. All right, so here's our game plan. We're going to start with the record-breaking quarter itself. Then, we'll dissect what was behind that big beat. After that, we'll look at the view ahead. And finally, I'll give you our official take on the stock in the next call.
Okay, let's just jump right into it. Urban Outfitters dropped a massive Q3 report on November 25th, and frankly, it blew the doors off expectations.
First up, the bottom line. Earnings per share came in at a record $1.28. That's a solid 8% beat over what Wall Street was penciling in, a really strong start.
And it wasn't just on the earnings side. Revenue also came in hot, hitting another record at $1.53 billion. That's about $40 million out of consensus and, represents over 12% growth from last year. That's some serious momentum.
So, how did the market take the news? Well, they absolutely loved it. The stock soared 13.5% the very next day. And get this, it was on almost 5 times the normal trading volume. That's not just a little bit of interest. That is major conviction from investors.
Now, this is what I find really telling. The options market was only pricing in about an 8.8% move up or down. So this 13+% jump, it completely crushed those expectations. This wasn't just hype. It was a genuine, bona fide upside surprise that definitely punished the short sellers.
Okay, so the big question is, what drove this incredible performance? Was it just one part of the business doing well? Nope. The real story here is the strength across their entire brand portfolio. And this table, wow, it lays it all out perfectly. You've got positive comparable sales across the board. Total comps up a very healthy 8%. But the real headliner, the flagship Urban Outfitters brand itself, up a staggering 12.5%. For anyone who was doubting that turnaround story, well, the proof is right here. And here's the kicker. The UO brand didn't just grow sales, it actually got back to profitability this quarter. That is a huge milestone, one that investors have been waiting on for a long, long time. Meanwhile, you just can't ignore the Nuuly rental business. It's an absolute rocket ship. Revenues surged almost 50% year over year. This is a serious growth engine for the company, not just some side project. The CEO, Richard Hayne, said it himself. This was an outstanding quarter, a true team effort. It really just underscores how well their diversified business model is humming right now. And check this out. They actually grew their gross margins. Think about that. They pulled this off even with tariffs creating a drag. So how they do it? Simple. By selling more stuff at full price and keeping a really tight leash on costs. That's just smart, disciplined execution. All right, so that's the story of Q3. But what about what's coming next? Let's look ahead. Management sounded super confident on their earnings call, and their guidance definitely backs that up. So for the all-important holiday quarter, Q4, they're calling for high single-digit sales growth. And maybe even more important, they expect gross margins to keep on expanding. That's a really bullish signal heading into year-end. And remember those tariff headwinds we talked about? They're actually expecting them to get a little bit worse in Q4. But, and this is the really crucial part, they still think they can grow margins anyway. That just shows you how much operational control they have over the business right now. Look, they know the holidays are going to be a street fight. Every retailer is going to be throwing promotions around. But management basically said, we're confident in our product and we're not going to chase sales by discounting everything into the ground. That tells you they think their merchandise is good enough to sell itself. Okay, so you've got a record quarter in the rearview mirror and strong guidance for what's ahead. That brings us to the big finish, the next call. What is our take on URBN stock from here? I mean, after the stock has already run up nearly 60% in the past year, you have to ask the question, right? Is all the good news already baked into the price, or is there still more room to run? Our view is pretty clear. We think this momentum is for real, and we think it's going to continue. For Q4, we're actually calling for a beat on their own guidance for both revenue and for earnings. We think the UO brand strength is going to surprise to the upside again, and if that happens, we expect the stock to test its 52-week highs, pushing up toward that mid-80s level. So here's our core thesis, boiled down. Urban Outfitters isn't just a turnaround play anymore. This is a best-in-class retailer that is executing a multi-year margin expansion story. With the UO brand firing on all cylinders and Nuuly providing that extra growth catalyst, we think this stock is set for a continued re-rating by the market. Bottom line, the execution is there. They have a clear line of sight to their long-term profit targets. And because of all that, our official rating on the stock is outperform.
This is not financial advice.